Hey everyone, welcome to SPAC's Attack.
I'm still dancing over here, yo. I love our intro there. I'm enjoying it. Hey, welcome back, guys. Welcome back to the SPACs Attack, where everything is all about SPACs. And today, we went shopping again. That's all I did. I don't know about you, Chris. And so one time that I can tell you guys, I'm happy to be as close to 10 as possible. And you guys know my strategy. I'm always telling it. And I'm trying to be as close to 10 as possible. So I got some entries today that I'm happy about. And I'll tell you about them a little bit later. But Chris, I know you got some headlines for us. What's going on, man? What's up in the world?
Yeah, we got some earnings to talk about, right? So we, kind of discussed it yesterday on the show that after hours we were going to have earnings from 3 former SPACs. And then also we had earnings from DraftKings this morning. So let's start with DraftKings. So that's ticker DKNG. Of course, a former SPAC, one of the best performing ones out there. So fourth quarter revenue was $322 million, up 146% year over year. That beat the street estimate of $233 million. So they had 1.5 million monthly unique payers in the fourth quarter, up 44%. And up 29% for the full year. Average revenue per monthly unique payer was $65 in the fourth quarter. So the key here with their earnings was they raised their full year guidance for fiscal 2021. So they now see revenue coming in a range of $900 million to $1 billion. Previous guidance was $750 million to $850 million. So this would be a new range of growth of 40 to 55% for the full fiscal year. They said that the guidance was raised due to the strength in that fourth quarter and the additional state launches. So in the fourth quarter, they launched in Tennessee. And since that time in Q1, they launched in Michigan and Virginia. So Michigan and Virginia represent 6% of the U.S. population. DraftKings is now live in 12 states, which covering 25% of the U.S. population. They're in more states for online sports betting than anyone in their peer group. I can't stress it enough. 25% of the U.S. population is all that they have access to right now, and they're a market leader. So I still think there's, room for growth there. This is, one of the best online sports betting pure play companies out there. Then last night we had earnings from 3 former SPACs. So up first we have Fisker FSR. We of course talked about Fisker on the show yesterday. I owned shares of the stock. This was one of my top 10 SPACs for 2021. So the keys to earnings, because again, this is a pre-revenue company. They said they remain on track to start production of the Fisker Ocean SUV in the fourth quarter of 2021. That vehicle has 12,467 reservations. They're seeing reservations really increase on the retail side of things now. And they point out that surveys are showing that, 70% of their customers are currently driving non-electric vehicles. So, they're able to shift people that way. They highlighted that deal that they signed with Foxconn for the production of a second vehicle. They said that second vehicle will be produced in 2023. Another key here was that they ended the quarter with $991 million in cash and no debt. So, again, you talk about a pre-revenue company, one that needs to, spend money to make money. You have Fisker here, with plenty of cash at the current time. And, again, they're using partnerships with Magna and Foxconn now to produce those vehicles, so they can focus on the design and the marketing of that. And then this morning we had a note out from Morgan Stanley with a $40 price target. So as you can see on that chart, shares are ripping higher today, on a day where there is a lot of things down. Fisker is one of the standout companies, as Morgan Stanley sees the opportunity there. And then turning to SPCE, so this is Virgin Galactic. I also own shares of this one. They reported fourth quarter and full earnings, again, pre-revenue company. So the highlights here, we're talking about their upcoming events. So they said they will roll out their second spaceship on March 30th. They have a planned next rocket-powered space flight targeted to occur in May. Then they also highlighted an upcoming flight with the Italian Air Force that will be a revenue driver for the company. So they had over 600 reservations from future astronauts who will take flight with the company to space at the end of that quarter. And then earnings from Velodyne last night. So this was the first public pure-play LiDAR company. Went public via SPAC, one of 6 companies now in the LiDAR space to use a SPAC. So fourth quarter revenue, $17.8 million. Down from last year. They contributed that to COVID-19 manufacturing shutdowns and not being able to fulfill certain customer orders. They shipped a record 4,237 units in the fourth quarter. So again, higher revenue per unit shipped. Full year revenue of $95.4 million. They have a pipeline of 194 projects from 26 signed agreements, and they still see the opportunity for $1 billion in revenue from 2021 through 2025. And that's with signed agreements. The other key here, so signed agreements already for over $1 billion. And then they also said that they have a pipeline of potential contracts that could be worth up to $4.4 billion in revenue. So then turning past earnings, some other SPACs to talk about and to watch. We had 2 new SPACs filed from Barry Sternlicht. So want to highlight JWSM and SPFR. Those are 2 outstanding, SPACs from Barry Sternlicht. And when I say outstanding, that they're already out there, that are searching for targets. With him filing for 2 more, maybe we see a deal announcement from one of those soon. So I know I have both of those on my watch list right now. We had a rumor that Indian online grocery store Grofers is in talks with several SPACs, including CCIV. That is according to the India Times. So again, we use Bloomberg and Reuters a lot for SPAC rumors. India Times isn't a typical source, but obviously it's a publication in that country, where this online grocery store has a presence. So I would trust that they at least know, that they have been considering a SPAC to go public. Then ARK Funds, of course, went shopping yesterday on those sell-offs, so added in several SPACs across the ETFs. So we have OPEN, CMLF, EXPC, ACIC, and SKLZ, all additional shares added to those ETFs. So again, no new positions in SPACs from Kathy Wood and company, but she definitely added to those positions. One of our big movers yesterday, NGA, so merging with Lion Electric, another SPAC that I own, up 8% yesterday to end the day. They announced that electric bus deal with the Los Angeles School District, one of the largest school districts in the U.S. Then SBE approved the merger with ChargePoint. Shares ended the day down 5%. New ticker is going to be CHPT. I do own shares of SBE. 2 vote dates set. We have BFT voting on March 25th and LOAC voting on March 17th. So we will add those to our calendar. And then another SPAC to watch for, we have PSTH. So the Bill Ackman SPAC, the largest SPAC out there that everyone wants to know what they may be buying. It looks like they may be close to making an announcement. Bill Ackman took to Twitter, interacted with some people. He, confirmed what we thought, that a second SPAC is launching from the company. And he also told people on Twitter that PSTH shareholders are going to get access to buy the second SPAC at the offering price. Again, not sure how we would make that happen. But Ackman wants to see that, go through. And then we turn to our calendar. So next week we have on March 5th, CFII voting on that merger with View, the smart window company. And then earnings on March 1st, we have CLOV, Clover Health, reporting earnings. So that's what I've got today, Mitch.
All right. Hey, guys. Well, I was hanging tight, getting a little excited, and taking some buys. Sometimes you got to take some buys. So not going to be upset, but hey, looking at some options today. So one thing we want to do is definitely get to our watch list so that you guys out there can know what we've been looking at all day long. So let's go ahead and let's get to our watch list here. Let's get into it. All right, guys. So pulling up the watch list here, guys, and going to look at some of the stocks that are up. And of course, we already talked about it, but Fisker getting frisky with Fisker. You heard it last night. Kramer getting frisky with Fisker, and I can't blame him. You guys heard me talk about this one for a long time. I'm still upset that I'm not in it, but hey, guys, that's just how it goes, right? The FOMO is real. So if you guys got FOMO out there, just be a little careful. Now start kind of measuring in where's the right price target. But like you mentioned, on a day where you're seeing a lot of red, this one up almost 30% now. What a day. All right, guys, looking like the Reddit crowd trying to squeeze the CCIV. Is that what you have heard, Chris? Because that's what I'm hearing.
Yeah, so again, I still own shares of CCIV. Getting a pop today. It looks like several Reddit groups, really trying to push that one higher. And then I also have an article out on Benzinga.com. Dave Portnoy taking a swing at CCIV today. Sounds like he bought $500,000 worth of shares. So we'll kind of keep an eye on that too and see if he talks about if he's holding or when he sells here.
All right, guys. So in my technical view, I'd be looking for a move closer towards 25. That's when I'd start getting interested because I could start risking towards the next level, which is 20. To me, right here, it'd be about a $10 risk, and that's a little bit too wide for me. So I would look for a little bit closer down. In my eyes, I'd look for 25, closer to 20. And then to me, that's not a bad price, especially for what they acquired. It's a good company. I have no doubts in that, but more along where does the evaluation come into play? And that's always what happens after this moment, guys. Once the definitive agreement comes on, it's no longer a guessing game. So now it's about trying to figure out where this evaluation is. All right, let's keep going. Let's see what else we got on here. Looking at one up that I was looking actually to get into, which is TPGY, but it's a little expensive in my case, and you guys know how I am. I'm just closer towards that 10 type of guy. But what's up with this one, Chris? And it's interesting near the price now, back to where kind of December 15th.
Yeah, to me, this might be a reaction of SBE falling. Kind of the peer player here, that charging infrastructure. So SPE falls 5% after voting through on the deal. So it looks like maybe TPGY, similar thing where, we're seeing valuation come down. So again, I like all these charging infrastructure players going forward, but, ultimately at the end of the day, who wins all those deals that Biden wants, to pass throughout the U.S. and who gets the partnerships with some of the auto companies. So that's another story to watch there.
The interesting price point for me is 19. Watch that 19 whole dollar. Let's see if that holds. That's kind of like some support right there. Maybe it bounces off of that. We'll see. All right, let's keep going on here. Let's see what else we got on our watch list. Do you want to mention maybe some of the ones that you were looking at, Chris, or maybe got into today?
Yeah, so I want to talk a little bit about some new ones that started trading today. And, big shout out to Benzinga Pro, right? So I am a user ultimately, and that's what we use here on the show. Our news desk team is amazing because I'm able to see right away, when these IPOs of these SPACs start pricing and when they go public. So this one that we have up here is FSNBU. So this is brand new, started trading today. So the units include 1/3 of a warrant. I was able to buy these units today at $10.02. That is just insanely cheap for a brand new SPAC trading in units. So essentially, if you break down the math of that, what you get in the unit is one common share and 1/3 of a warrant. So if you take out the common share and assume a $10, price point, which is the floor, which actually it ends up usually being above $10 that you can exchange back in, if you don't like the deal, that values that 1/3 of a warrant at 2 cents. So the total warrant is valued at 6 cents. You can't find SPAC warrants for 6 cents right now. You're lucky right now if you can find warrants under $1.50. Those are the cheap ones that I'm looking at right now. So then this is the same team that landed a deal for Money Lion. So if you look at Money Lion, FUSE, those commons right now are $10.59. The warrants are $1.83. In the past, those commons hit $12.90 and the warrants traded over $3. I'm paying $10.02. So my downside here is essentially nothing because I can trade in that common share at $10 plus interest, and then I still have that partial warrant where I can sell that warrant, in 52 days when these split into common shares and warrants. So I can make my money back, just like that. That's why that $10 price point is so important, and why, Mitch keeps talking about, trying to get these SPACs between 10 and 11. So a lot of times you've struggled to find commons under, $10.50, and now we have units trading under $10.50. That's just, I think, great value to me. And then a couple of other new ones today. We have KCACU. So this is Kensington Capital. This is the same group that landed QuantumScape, ticker QS. One of the, it was the best performing SPAC last year by peak dollar amount. So these units priced today at $11, and they're now trading around $10.80. So you can get a common share and 1/4 of a warrant for $10.80. And again, that's from a management team that's highly respected for landing that QuantumScape. I think when these things split, you're going to have common shares trading over $11, and who knows what the warrants will be trading at. So a great opportunity on day one, a day with SPACs down, to target some of these units trading lower. And then a couple more just to highlight quick to show you guys. TWLVU, that one also priced today. Units are actually under $10, $9.97, and that includes 1/3 of a warrant. This group is targeting Western and Eastern Europe or the Middle East. So again, $9.97 for a unit, and you get 1/3 of a warrant. You can trade in your common share for $10 plus interest if this deal, if you don't like it. So, you pay $9.97 and you're actually buying over $10 in value. So, again, we talk about risk reward. Here you have the ultimate case of, limited risk and high reward, because who knows who they're going to acquire. Who knows what shares are going to do on that day that is announced. You have, high opportunity here. And then another one that I own is LEGOU. So this one is not new today, but it is still trading as units around $10.20. This comes with a full warrant. So you buy a unit for $10.20, you get a common share and a warrant. They're targeting renewables, infrastructure, energy, construction, and industrial. So some high growth areas there. To me, that it screams value that you're able to get these units under $10.50. So again, I did buy the first one there, so FSNBU, and I do own LEGOU, and I'm keeping the other two on my watch list. It's about 3:15 Eastern time right now. There's a chance that, maybe I end up picking up one of those other ones. So before I get into any more, Mitch, let's talk about what you were able to score today.
Well, I just took a lesson right there, by the man, the brain, Chris Katje. You already know, guys, the units under 11. My man taking me to school today. I can't blame him. You got to take notes sometimes, even from the master. If you guys aren't following my man, you guys already know where to find him. Hey, one thing that I noticed here that really stood out to me was that KCAC, just because, like you mentioned, I mean, you're talking about a really successful team. And so at that price, especially what I saw on the chart, I saw 2.2 million shares traded right out the open. And now it's under that pricing. So regardless of you couldn't really be shorting the stock there. So those were buys there. So what I would say is, hey, take a look at this one. I'm going to take a look at this one myself. We'll see how low we can get it, but you know my rule. I'm a 1050 type of guy, but I'll see if it scoops down for me, and if it does, I'll take it. I got a couple today, so I want to talk a little bit about what I got, guys. But definitely great lesson, Chris. I like how you went into units today, and it's important to learn some of the different aspects. A lot of people talk about warrants. To me, the volatility in warrants is why I stay out of them, just because you really got to stay on top of them. But what I would say is, at least looks like units might be more of my thing too. So, hey, I appreciate the lesson, Chris. So let's go into the next one here. So let's go into some of the ones that I got. Let's pull up the portfolio, see what I've gotten filled, because orders still out. Got some fills today on two that I did a little screener for. And I just want to mention a little bit what I filtered for. So the first thing I filtered for were, gotta filter for SPACs. So I filtered for SPACs. I got that set out. And then I went to pricing, right? Because we're getting really good discounted pricing right now, right? And so a lot of times you hear Chris and I mention that 10 to 11 show. I was even going cheaper than that, Chris. I was trying to find the ones that were dirt cheap. I changed mine to 950 to 1050 on the screener. And I just wanted to find things that were literally below my buying point, which is, to me, 1050. So with that being said, at that point, I said, why not separate by top market cap of these? So then at least I got some potential of investment behind it. That gives me, it could get a sexy name. You never know. And so I went after two that I felt were pretty good. First one up was one that I really was interested, but didn't expect to get it cheap. And that was CRHC. So let me go ahead up and pull up that chart here. And Chris, tell us a little bit about this SPAC before I talk through the technicals.
Yeah, so this is a SPAC from Gary Cohen. He's a well-respected name in the SPAC world. He's also on the board of directors of IBM. He's held office with a bunch of publicly traded companies. He comes from Goldman Sachs. He's done SPACs before. To me, this one, is great at the price point that you got it at today.
Yeah, so we'll use our little Alt-H on Benzinga Pro, and I drew this line kind of across, and I said, you know what? It doesn't look too bad at 1030, So I had an order out at first 1030. It kind of went through that level, so I when it was coming down through it, I kind of canceled. I let it bounce a little bit, but I'm not mad at my entry. I got in, guys, at 1038 here, and I'm not going to be upset here. I can see kind of my flooring here, and to me to get into this floor where a whole lot of volume got in here in the 1120s, I'm excited to be in this one. This one has a market cap of 1.11 billion. So we'll see what they get. All right, the next one up here. Next one I grabbed, and a part of this is a lot of from Chris was. I've heard him talk about this one, and I was interested. So, I did a little research on mine, and I went for it. So SPAC here, SPAC, guys. That's Far Peak Acquisition. What's up with SPAC, Chris?
Yeah, so SPAC, this is one that we highlighted on our crypto show. So targeting fintech, this is Thomas Farley. He's the former president of the New York Stock Exchange. And when he was with the New York Stock Exchange, he was pretty vocal about getting into cryptocurrency. he's been a supporter of it for years when, you saw a lot of regulators and exchanges really kind of shy away from it. He was at the forefront. So to me, you have Farley and you have FinTech. I think they go after crypto.
Yeah, if you look on the chart, I just liked how close I got it to 10. I was able to get in. Also, the today's low is 10:08, but I got a pretty good entry here at 10:15. Not going to be mad at that 10:15 entry and give myself an ability to be as close to 10 as possible and give myself a good risk and return. So, I'm pretty diversified now, guys, in my SPACs account. Just to give you guys some information, like this kind of position is really only 7% of my diversity for my account. So just to give you guys some how diverse I've built up this now SPAC portfolio. The market cap on this one is 617 million. So not too bad there. I think that's a significant amount. I always like when they're above that 500 mark. To me, those look like big companies, and it always gives them a potential to get even bigger company there. So we'll see what we get, and we'll have to go through some of our SPACs in a little bit to see how they react. Overall, not looking too bad on the day. And this is what I love really about SPACs, guys, is like if I look down at my account, it's really only down 0.008%. And so that's kind of like what I like to see. I don't know about you, Chris, but those are days where I can just not stress, and that's why I like to diversify in SPACs, guys.
Yeah, exactly.
All right, guys. So before we get on out of here, just want to take a look at one or two more here and mention some that I'm looking at. So first up is PIPP, just because of the pullback and such a significant pullback. I'm going to go to the daily so you can see how much of a pullback this is. But this one came all the way up to a high of 1494, and it really opened on that January 7th at like kind of this 1050 area. You have an open of 1075 and a high there of 1080. So right now we're at 1080s and we had a low of 1066. To me, this is an interesting chart just because it's pulled back that much. When you get that kind of pullback, you kind of expect it to kind of get near that pullback bounce. But I'll keep an eye on this one. There was a significant volume in this kind of harmy. I think someone thought this kind of 1180s was going to hold, and they put a significant amount there. There's 1.5 million there. So you might find some resistance there when it gets back up there, but definitely I feel like someone got caught there. So if someone did get caught there, this could turn around and get back up towards their level. We'll take a look. That's PIP, and that's Pine Island Acquisition. The last one I'd mention, and maybe you want to give some comments on, is RSI. What are you thinking about RSI, Chris? As it looks like we have earnings 12 days from now confirmed on March 10th after the close.
Yeah, so RSI, again, this is a player in sports betting, but more importantly in the iGaming side of things, so online casino. The thing that strikes me on this one, and, again, we've talked about this one from the start. We had Niccolo De Masi from DMY Technology who, brought this company public with this SPAC on the show. They just signed a partnership with Penn National. So what they essentially did was they swapped some New York rights with Penn, and then they gained access to 3 states and possibly a 4th, which is Texas. So they now have access to 3 more states for online gaming, and then possibly Texas if Texas legalizes sports betting. So to me, that was a smart move, right? They're going to still have access to New York, but they're also giving up a skin there, which is incredibly valuable, in the online casino space. But they're also gaining access to other states. And as we've seen with sports betting and iGaming, it's kind of about getting access to every state and also then getting share there. So, they have strong market share in Illinois and I think Iowa, some of the smaller states. But that iGaming, right, the more profitable side of things, the online casino, they're a major player. So, RSI is more of the casino online versus the sports betting. But again, that's more profitable. So in the long run, might be the better stock option.
Yeah, it's going to be interesting. You know, I like I've always said about that industry, it's state by state, and you see it. You see it has the revenues increase. You see the guidance from multiple companies, like we talked about DraftKings earlier, and the guidance being put out further and further forward. And why is that? Because states are actually getting pushed because of the pandemic. And because of that, I think, you know, we even heard it from our interview last week from Nicolo, that's kind of what he saw, you know, and that state by state, the pressure is on to get to legalization. I think, you know, Florida, I think they're going to push it pretty fast. You know, I think Florida's really kind of more in that. I talk to my Florida buddies because if you guys know, I grew up in Florida, so they're always telling me like, man, I can't even believe it's not already done here. So we'll see what happens with Florida, but definitely it's going to be interesting in this industry. And like always, guys, we'll keep going at it on SPAC's Attack, guys, finding what we get into, what information we find, executives. We got some interesting executives next week. Like always, guys, we're going to have some interviews. We've been working hard to get back at you guys. We'll see you guys on Monday. Looks like I'm probably going to have to take a little step out, but hey, I'll tell you guys, I'll be back on Tuesday with a really good interview, and we'll be back at it. Like always, guys, check out our gear. As you guys see Chris with that SPAC's Attack shirt, join up. Send us some pictures. You know what? We need to do another giveaway. We'll do a giveaway next week.
Giveaway next week for some of these awesome shirts. I love this shirt, guys, and I mean,
you know what?
Look, SPAC's Attack. I mean, I
don't know how I'm going to make it happen, but I'm going to do a big giveaway next week. I got to do like 20 shirts. 20 shirts.
Let's do it.
20 shirts. You guys hear that? 20 shirts. I'm going to get yelled at about that, but
smash the like right now.
Smash the like, guys. 20 shirts.
Smash the like.
Hey, I want to see at least 200 likes on this video. Let us know, guys. The SPAC's Attack is here, guys. We'll be back at you guys, and we'll see you guys on Monday.